Hello everyone, this is James Anadon with Pillar 6 Advisors. Thank you for clicking on the Q2 Market Outlook email. You can go ahead and download the PDF that's attached to the email if you haven't seen it in there. This will go ahead and explain a little bit about what's in there, but what I wanted to do before I get into that is just go ahead and say thank you very much to all of our clients, all of the financial planning clients that we have, for trusting in us to go ahead and help you make decisions or make decisions on your behalf. We really appreciate it and plan on continuing these videos to help you make more of those decisions moving forward. We have just gone through a pretty volatile time in the market, and what we want to do is make sure and let you know that, hey, we're paying attention to this, and we want you guys to know that as well too. And that's what partially this is about. Again, we've gone through a really volatile time within the markets, and I'll preface that with saying this is why we are a bit cautious. We're actually a little bit more on the optimistic side at this point, but we're still cautious at this moment. Economically, we expect the data to continue to come in, pretty bad. There's no doubt about that, at least through this next quarter. As we move forward, we'll have to continually update this. And so that's why I preface this with saying we're still cautious, right? In the past, I've mentioned that capital markets are, they're a mechanism where it's a pricing mechanism that prices future cash flows in today's dollars, right? And that by that simple fact, that makes it a leading indicator to future economic activity because it's measured in future cash flows, which is basically corporate earnings. And so, because of that, hence that's why we're in a down market, right? A lot of analysts have come out and said, hey, corporate earnings are going to be hit pretty hard because of the COVID-19 slowdown in the economy. And so that's why we're seeing a pullback in asset prices, right? But despite the pullback that we saw in asset prices, despite the closing down of the economy, of significant parts of the economy at least, there are some positives kind of brewing underneath the surface, and we need to be mindful of those because these are good things to look for, right? Right now we're hearing a lot of negative. We're always hearing negative in the news right now, and we need to start looking for some good tidbits that we can start saying, hey, okay, the market right now, since it's a forward-looking indicator, is looking over the curve of this, and it's giving us the potential to say, there's some good price action going on here, and how do we, start to enter the market? Number one, we're starting to hear signs that the COVID-19 issues may be nearing their peaks, possibly nearing their peaks in some highly affected areas. The government has added quite a bit of stimulus to the economy. That's another massive positive. And in fact, they're actually talking about adding more. So at least I've read some possibilities of that. The Federal Reserve has lowered interest rates to pretty much zero. And so, they're also offering liquidity wherever they can in the markets. This is all good information. This is stuff to do the jobs that we expect them to do, right? We expect them to help us out, help the economy out, help in situations like this. That's what we expect from them. The country is already talking about the process to start opening, right? That's another awesome thing. Now, these things have not really transpired into, forward-looking movements yet, which is why we're still a bit cautious. But this is where we're at. We're talking about these specific things. We also have a possible meeting tomorrow on Thursday, the 9th of of the OPEC nations meeting over oil prices. These are all positives. Currently the market is moving higher. We've gone through about a 25% increase in the market over the past, I want to say 12 or so trading days. That's right now it's interesting to see that because we're starting to get some price action in the movement forward. But there's one thing that we need to keep in mind, and that's the possibility that this move to the upside is more of what's considered a counter trend rally, or some people call it a bear market rally or a bear trap. And they're pretty true instances in the past that we can look at, which I'll show you a chart right now of counter trend rallies or bear market rallies, right? And so the chart you see right here is a count is the S&P 500 from October 2007 to probably, this is, it says February 2009. This is probably March, which was just about the bottom of the market. I think it was early March 3rd or 6th or something that way. And you can see there's certain instances where we see some counter trend rallies within the market, within its overall downtrend, to give the idea that there may be some movement to the upside. And so these are pretty true phenomenon. I'm using 2008 here, but it's happened in every single market crash, right? And so those are the areas that we need to go ahead and pay attention to. So that is another area that puts us at a bit of caution. Well, right now we are looking at, we try, us as investment managers, we look at two things. We look at the fundamentals, which is the economics, the underlying things that would help a certain piece of the economy, industry, may flood money to certain companies and things like that, right? So that's the fundamentals. How is a company doing? What is their price to earnings? How are their revenues and things like that? And then we look at the technical side, and the technical side is, okay, what is the chart telling us? And there's multiple charts and multiple things that we look at. It's not just the S&P 500. It could be different mathematics based upon that chart that we're looking at for indications of how things are moving, right? Rate of change of different asset prices and things like that. How is one asset, faring versus another at this point? And currently, right now, we're starting to see a setup of positive look forward. But again, we need to be very, very cautious, and we need to be just understanding that bear market rallies exist. Not to say that that's what we're in. I also don't want to say that, we absolutely hit the bottom on March 23rd, as many people have said. That's an absolute possibility. It's impossible without luck to truly know if you have or have not. And so in any event, please go ahead and download the Q2 Market Outlook. We really appreciate your time. Again, we really appreciate all the trust you put in us. Please feel free to read the Market Outlook. Give me a call or send me an email. Set up a time to talk if you have questions. You can start to expect us to start slowly buying into the market as we start to see pullbacks from currently where we're at in this rally phase that we're seeing. I'm not sure if it's a bear market rally. It's just we need to be very, very cautious and start dipping our toes in, because again, it's impossible to know the exact bottom. But at this point, things are starting to look a bit better, and I'd much rather buy into strength than buy into weakness. And that's kind of where we're at this point. Again, I really appreciate your time. Thank you very much for all the trust you put in us. And feel free to call me, set an appointment. We can talk about your portfolio if you would like, if you need. In any event, we hope you're having great time with your family. Everyone's staying healthy. Look forward to talking to you soon.